Hello traders, in today's video we are going to be talking about different metrics of risk and basically how we can identify whether longs or shorts are about to get crushed by Bitcoin. So the new indicator that I want to show you guys is called the margin lending ratio, and that's what we're going to primarily focus on. And I'm also going to unhide these two indicators. So before I talk about what this indicator is and how it can benefit us, first of all, I want to talk about the different ways in which you can, take advantage. These kinds of strategies are typically more geared toward options, so knowing when to buy a move contract, which is basically just buying a call and a put at the same strike price, but FTX, BTC move contracts, or just whether to buy a put, whether to buy a call, like stuff like that. Basically, is what this is going to cover. So yeah, let's dive into it. So what the margin lending ratio tells us is how many people or how many dollars worth of USDT is being borrowed and lended, versus how much BTC is being lended. And the numerator is how much USDT is being lended, and the denominator is how much BTC is being lended. So essentially what that means is when the ratio, you can see right here, gets very, very high, what that basically means is that margin spot traders who are taking on margin leverage and borrowing dollars in order to go long are using more and more leverage, or margin in this case, that is. And you can see that happening right here. When this ratio goes from a decently relatively normal level in the 20s, and then we get to something like 86, that's insane. That means that isn't just an insane amount of people buying in a really, really, really bearish sign. Because essentially what that means is that 86 times more money is being put into longs than shorts when it comes to margin BTC. So that's really, really scary. And what do we do in these situations? Well, if you see this margin lending ratio on OKX getting very, very high, almost always the market brutalizes and just kills all the longs who are taking on too much leverage and just keeps going lower. That happened right here at about 23.6. We can see here is, look what happened when the ratio was high. It just tanked until the ratio, this is kind of creepy, but the ratio actually went very, very low, which indicates to me that what probably ended up happening here is that there were a few very, very large positions that were trying to buy the dip, and they got absolutely crushed, as you can see from the data here. It's kind of hard to see just what percent of loss this is, but it's pretty large because we're on the 1 hour chart. So when this peaked, we were around here with a lot of people borrowing funds to go long. Then the market fell over 12%. That's going to liquidate and margin call a lot of people who are on borrowed funds, right? And you can see here after this fall, people slowly just were getting out of their long positions. And that's really, again, how these markets work. Another really kind of interesting one was that you can see people were getting more and more confident in longs. You can see that right here. More and more people are borrowing USDT, to go long. And then look what happens here. Price kills them all in like a quick move. And you can see the ratio goes from about 30, or what is that? 60 to 30. 60 to what? Like down to like 15. Essentially what was happening is the people that were borrowing a lot of USDT to go long on Bitcoin stopped because they were probably margin called. So, very happy, right? So let's talk about what happens when this is very low. When this is very low, what that means is that a lot of people are borrowing Bitcoin. And what I love about this indicator is look what happens every time when people get a little too comfortable with Bitcoin falling. It's really interesting. So right here, let's talk about what's going on psychologically, okay? So psychologically, price has been falling for a long time, and we're going to go back into June 30th. You can see that the lending ratio goes from about, the teens and the 20s. Now we're down to a very, very low level, like 12, 13. At the point of about, 19,000, 19,400, around here, so many people were convinced that Bitcoin could only fall. It can only go lower, right? So a lot of people were borrowing Bitcoin to short. When a lot of people borrow Bitcoin to short, it does not end well. a short squeeze. And it looked, the candlestick that you're about to see that you've already seen is just the classic example of a short squeeze. It looks exactly like what a short squeeze has always looked like, just like that, and then return. You know, you kill them all like that, and then you just return back. It's brutal, but it's just how this over-leveraged market operates when so many people are, you know, mishandling their margin and mishandling leverage and finding themselves on the wrong side of volatility, of course. And what we can see here is after price rose, people got really excited and started borrowing a lot of, you know, USDT in order to go long on Bitcoin because they thought they were going to moon. And then when the ratio went from about 12, which means that at this point in time, there was 12 times as much money in USDT longing than there were in BTC shorting on the BTC USDT margin contract. And then we go from a 12 up to a 31. A lot of people are not borrowing Bitcoin. They're now all borrowing USDT to go long. Not healthy for the market. You do not want to see, if you're long, you do not want to see a bunch of retail traders long. It's just fuel to the fire. Speaking of fuel to the fire, what happened to these guys? They got crushed. They all bought, they got too excited, and they got destroyed too. And that's just kind of the loss cycle that continues time and time again. I mean, it's kind of sad, but it's just, again, it's just kind of the way that this thing works. People began to hop back into BTC to short, and then what does price do? Just leaves them. Like, look at this. We go from a 30 down to like a 16 to 15. People are beginning to borrow Bitcoin to short. You can clearly see that in the data, right? And Bitcoin's just like, nope, we're not going to come to this point again. And if you had shorted here, you would have been killed, because look, you can't survive an 18% rise on a lot of margin. That's just too large of a percent gain. You would be margin called, and you'd be partially margin called or fully margin called. It would just not be good. So yeah, that's what happened there. Yeah, and then we're gonna get to the other indicators too, but I really do like this indicator a lot. Another classic example was this time a lot of people had actually borrowed USDT. Borrowed USDT to go long BTC USDT margin, and they were correct. Price went up, but then for some reason they all stopped, meaning that either one of two things happened. Either a lot of people started borrowing BTC to short, or the people that were borrowing USDT to long BTC, to long Bitcoin, the contract, just stopped, i.e. taking profits. And that's what happened right here. A lot of people just, for some reason, started shorting at this price. I do not know why. I think a large move made them think that a BART was going to happen. So just everyone, started shorting. And this ratio goes really low to 12.6. And when everyone is trying to short and just everyone's taking profits, the market's going to kill you. And it really killed all these guys because price went up another classic 10%. So, lovely for them for sure. And now we can see it's just kind of in a lower number, which is making me a little bit more bullish, of course. Now I want to add in the other two guys, because in order to have a system, we don't want to just use one indicator. A lot of my videos, I spotlight one indicator that I like to talk about, but you do know you need to combine other indicators to get a better indication of what other traders are doing in the market. And the reason I like to be very unifocused on one thing at a time is because I think that a lot of people who watch my videos might just get too confused. When I used to do videos that would feature multiple indicators, it just didn't go as well. So that's why I wanted, be more isolated and then add more things in. So if you can take it, I'm going to add a few more things in right here. The bottom thing should be something that if you've seen my YouTube videos before, you know, like the back of your hand. Open interest aggregation shows us in the futures market, which is different than the spot margin market in OKX. This is open interest aggregated. So the Bitcoin futures market across dozens of exchanges, how many people are long and short? If it's 20 billion, then we have 20 billion US dollars worth of longs and shorts. If it's 9 billion, you get the idea. That's how it works. It's also a measure of risk. When it's very, very high, a lot of positions are active. A lot of people, are interested. And that's where volatility can hit when open interest gets very, very high. Above it, what we see is something that's pretty simple to explain. It's just the top trader's average leverage used. It's exactly what it sounds like. So when we see this number at 15, 16, whatever, that's the average amount of leverage that longs, green, and shorts in red are using. Now, typically, when longs are more leveraged than shorts, price goes down. And also typically, when shorts are more leveraged than longs, typically price goes up, or at least burns the shorts. That doesn't always happen, as you can see here. That's why I like the margin lending ratio a little bit better. But at the same time, combining these, I think, could give pretty good, indications. And you can see at this point right here, when this was moderately low in the teens, and then this was, we had more shorts using more leverage than longs. I mean, price just killed them all, as you can see right there. And then if we were to couple in the third indicator with an indication, what this third indicator is going to tell us is how many people have positions on, i.e. how much volatility should we expect. So if we look at a point where a lot of people had positions, this right here in early June provides a lot of fuel for the fire, And especially when, this is so good to look at. Oh my God, have you seen a better indication? Open interest is really high, meaning that there's lots of money to be liquidated and margin called and destroyed, unfortunately. Yeah. And what we can also see is, look what was happened to the margin lending ratio. It's rising, right, as price is falling. What that means is that people are using more and more margin, are throwing more and more to long Bitcoin. That's exactly what the data is showing. So their margin's being strained more and more. And that's exactly what happens. When you see a downtrend like this, guys, that's just like steady down, and you see people are using, more and more and more, are lending and borrowing more and more USDT, and then also, not shorting Bitcoin as much by borrowing Bitcoin, and it's just rising as price is falling. It's really, really, really bearish, because it tells me that a lot of people are just throwing fuel on the fire that's just gonna, kill them later as price dips lower. And you can also see, the top traders' average leverage used didn't really help that much. Maybe you could have found, it kind of did actually. I take that back. Around here, at the base of the downtrend, we can see that the longs are a little bit more over leveraged than the shorts. So perhaps that could have given a little bit more of a short signal. But what we do see, also when this spikes, typically, that might not have been a terrible time to have taken profit on your short, especially when this spikes right here and open interest is very, very low. This is definitely would have been a primo place to take profit, and then maybe hop into a short later. But these three indicators really do talk very well together. And in this consolidation range, what I want to point out, and what I've been already pointing out, is, again, a warning sign and something that makes it incredibly likely the price is going to just tank, is when you see the margin lending ratio on OKX rising, when you see top traders' average leverage used being very, very high, like right around here, with the longs using a crazy amount of leverage, and you see open interest relatively high. I don't think it gets better than that for a shorter buying a put. Seriously, it's just they're all going to get slaughtered. And of course, the best place to short was right here, and you can just look to see, people start taking on more leverage or more margin and borrowing USDT in order to buy Bitcoin right around here. And then as they do that, the average leverage used by top longs is about 28x. That's insane. It's a lot of leverage. And we also see open interest very high at this consolidation range. So this would have been just such a good spot to have bought a put or entered into a short. And then, had you shorted here, you would have been up a gajillion dollars, as you can probably tell. You would have had to stomach some pain because this happened, and this would have been kind of painful if you had shorted right here. But whatever. If you had survived that and just seen the data was good, then, So yeah, that's going to do it for this video. You can also do this on a lower time frame. I don't know why my computer sounds like it's about to blow up. Hope you guys can't hear that. But yeah, on lower time frames, do know that the data can be a little bit weird. You can see kind of this happening. You can see this, which, obviously this isn't a real print. It's just probably a misprint. Because if it was a real print, then we would see a lot of volume on the contract. We would likely see a lot of volume on Bitcoin. But when you zoom in here, all of this data, of course, is real. So if I go to 5 minutes and just look here at, what are traders doing? Well, it looks like, here I think this indicator might just be better, guys, on the 1 hour and 4 hour. I think on the 1 hour and 4 hour, it's just going to be so much cleaner. And you're going to see really, really nice trends such as this, where everyone starts shorting Bitcoin out of nowhere. Look at this. Everyone's like, oh, I'm going to short resistance. And I can see that evidenced by, one, a rise in open interest, which means more longs and more shorts. People aren't exiting. I can also see the average leverage used for shorts is very, very high right here. 2. The third thing I see is a massive fall in the margin lending ratio, which is telling me that either a large group of traders or a single trader went from borrowing a lot of Tether to buy Bitcoin to borrowing a lot of Bitcoin to short. And it did not go well for them. You can see that this ratio went lower and lower, which indicates to me leveraging, or in this case, demargining of BTC USDT margin longs. So, RIP to them. These 3 indicators work really well together. So this is definitely a setup that you should check out. And, of the 3 indicators right now, I think that this one has been doing, pretty well. So one last thing I'm going to say, and then this time for real, I'm going to end the video. The reason why I trust OKX data a lot more, which is the data that we're looking at here, is that currently it is the second most popular exchange when it comes to derivatives and spot margin on the planet. Number 1 is obvious, it's Binance. Because OKX has been rising to a tremendous amount of power, this data, of course, is just going to become better and better by the day, the more people that use it, the exchange that is. So whenever there's Binance or OKX data, I'm very happy to look at it because the volume there is just so much higher than it is on something like maybe FTX derivatives, which might be in the top 10, but not near OKX or Binance because OKX has a large Asian market. Well, probably so does Binance too. But that's going to do it for this video. We can now look at risk in even more ways, and you can be the one who practices good risk management and burn the retail traders instead of joining the fire. Happy trading. Go get them.